Now, let's move on from there to our main story of the day, and producer prices in the EU are no longer rising as quickly as they were, which is, of course, likely to affect pricing for end customers. So while we are going to see modest reductions in inflation at the moment, the pace of change is likely to hot up, according to analysts. Here's more.
Eurostat data shows that producer inflation in Europe continues to fall. This heralds less and less pressure on the price of goods on the shelves and a further decline in regular inflation. The weak economic situation of the European industry has an impact on lower price inflation of sold output, or producer inflation. In June 2023, the annual price change index for the euro area was minus 3.4%. This means deepening deflation, as already in May there was a fall in producer prices in the Eurozone, then by 1.6 percentage points. The acceleration of the fall in producer prices was no big surprise for economists, who forecast the output inflation rate to be minus 3.1%. In Poland, the index of producer inflation is falling, with the price increase slowing down and prices themselves not falling yet. Producer inflation illustrates price changes in the industry. It assesses the amount of money that the producer receives for the products less the taxes due, rebates and discounts. It shows what prices manufacturers actually get from selling their products. Producer inflation shows a few months in advance what is likely to happen with consumer inflation. It indicates whether inflationary pressure has arisen at the production stage and whether companies manage to pass on rising costs to the recipients of goods. If the index falls, retail price growth is expected to slow down.
And to discuss the issue, I'm joined by Professor Krzysztof Zęba of the Gdańsk University of Technology. Professor, thank you very much for joining me. Now, I didn't hear you there. I wonder if we've got sound from Professor Zęba. Could you say that again, please?
Yes, of course.
Now I hear you. Great to see you.
Great.
Oh.
Yeah, my pleasure. Good evening.
Now, what I wanted to ask was, we're looking at, first of all, maybe manufacturers when we're looking at production prices. Is it a bad time for manufacturing in Europe?
Well, probably not the greatest one. You know, first of all, I would probably like to draw your attention to those seemingly sensational headlines saying, deflation in Eurozone deepens. Hold your horses here, right? There's been a bit of misunderstanding, actually, because what we talk right now about, these are producer prices. So they are pretty far from the prices that we, regular people, pay in, let's say, shops. Mm-hmm. We should be happy, or especially the people living in the Eurozone, they should be happy about producer prices falling. But on the other hand, we need to ask ourselves a question, all right, why would those prices go down? And the truth here is the economic growth in the Eurozone is not that strong. Mm-hmm, mm-hmm. So actually, this is probably the main reason why those prices start declining at this level, at the level of producers.
Okay, but I mean, this is partly maybe because of energy prices and things like that, as well as anything.
Yes, of course, it is quite likely. I mean, I don't know exact data on that, so I'm speculating here a little bit. But you need to remember that in August, September last year, this producer price index was growing like 30-40%, which is huge, right? And that was certainly because of the factors that you have mentioned. Obviously, we consumers, or to be more precise, consumers in the Eurozone, they didn't face such huge increases because there is a number of middlemen between producers and consumers. So they were able to absorb part of this price increase.
Okay, now one thing that we've been hearing quite a lot about, particularly with tensions in Asia, maybe not getting on quite so well with China, is the idea of reshoring or friend-shoring, the idea that manufacturing would come back to Europe or countries and that are not China, essentially. Are we seeing any of that happening?
Well, questions about the future, my favorite ones. I always miss my crystal ball. I would say that, first of all, certainly even COVID pandemics showed us that those long, sophisticated supply chains are very vulnerable when something unexpected happens. Second of all, we've got geopolitical reasons to become less dependent from China. By we, I mean the European Union, the USA, generally Western countries. Third of all, moving production, manufacturing activities back to our countries is likely and unlikely at the same time, because on one hand you could say for instance, labor cost in China is constantly growing. Therefore, they lose this kind of competitive advantage here. I mean, they still have this advantage, it's simply less important. On the other hand, we do know that Belgian, German, Italian worker will have to earn significantly more than people in, let's say, Bangladesh. Mm-hmm, mm-hmm. These are, those two tendencies. It's quite difficult to say to what extent political or geopolitical reasons would prevail over economic calculations. What's cheaper, simply.
Of course. But going back to production prices falling, now we saw after the financial crisis that we had the price of oil and many things related to or that are dependent on the price of oil going way up, and then after 2014. Or 2012, I think we had massive, not just deflation, but we had simply a situation where the prices were going down. Is that going to happen again?
And that's deflation.
Deflation.
And that's deflation, actually.
Yes.
This deflation is actually measured on the producer level, because changes there are more violent. So there is greater volatility here.
Yes.
Consumers, we do not experience that because we've got those middlemen between producers and us, consumers, and they absorb quite a lot of shocks. Therefore, for instance, even though producers' prices are going down right now in the Eurozone, I do not expect consumer deflation.
That's what I meant. Yes, consumer deflation. Yeah. Because we had it for 2 years.
That is right. But here again, let me remind you, and especially our viewers, deflation is actually not better than inflation. Of course, we do like prices not to be high, and our common sense would tell us, okay, if prices are going down, that's good. Actually, deflation suffocates the economy. So it cripples economic growth. And if you look at the history of modern Japan, last decades, you can see it very clearly.
Well, indeed. What we had in Europe, of course, in the late 1970s, early 80s, was a period of what they called stagflation. So high inflation, but also no growth. Now, are we getting into that area?
Well, there is some likelihood of this scenario happening again. But on the other hand, I would say this period of stagflation, when the term was coined, actually, because it appeared exactly in those years that you have mentioned, that was pretty special case, pretty special situation in the economic theory. In the economic theory development, so to say, this period was really important because, that marked this end of Keynesian economy and so on and so forth. Again, it's difficult to say. I believe there is some danger. We should be careful about that. But on the other hand, we see inflation is going down. Of course, it goes less down in Poland. It goes more down in the Eurozone. So in the sense, having common European currency would probably be better for our country. So I would not be that much afraid of stagflation right now. I believe 1 year ago, the risk, the danger seemed to be greater than now.
Okay, well, that's maybe good news. So we've got disinflation, no deflation, and governments are maybe trying a little bit of reflation. Who knows? But there's certainly lots of technical terms being bandied about. And Professor Krzysztof Zięba, thank you for allowing us to kind of get through all the gobbledygook and getting to find out what's been happening. So thank you very much for joining us.
Thank you.
Thank you. And more stories coming up.